and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over week 16 of our numbers for our investment portfolio. And this is as of November 10th, 2024, which is today's date on a Sunday. So we're going to get into our weekly numbers. So first, as always, our current portfolio's net worth. We're at $259.27. Again, this is as of November 10th. We have our weekly data for week 16. You see in the lower right, we have our money weighted return of 0.98%. You'll see this slight increase right here. This is from our net cash flow, our deposit of $30. You see net cash flow right here, $29.74. So about $30 right here got added from the cash account to the portfolio. But as always, I want to highlight the portfolio's performances right here, 0.98%. So we had a market gain of $2.22. This is from the period of November 4th to 10th. Obviously a volatile week because it's an election week, so it's going to have an effect on our numbers. This is our monthly data. So we have our $30 deposit on October 16th. And as I just highlighted on November 6th as well. So we have net cash flow of $61.48. So that's cash in the account. Our money weighted return, our performance return, is 2.39% for the month, with a market gain of $5.05. We had a dividend of 13 cents. So this is from October 10th to November 10th. This is our monthly data or our monthly return. And then our quarterly return. So each of these jumps in the price chart are our $30 deposit over this 3-month period from August 12th to November 10th. So we've had a net cash flow of $151 over that time period as cash deposit. Our performance return, our money weighted return right here, is 6.23%. So we had a market gain of $9.34 and a dividend earned of 81 cents. So this is our quarterly data return. So now we have our numbers. So our current weighting for each of our asset classes, we are 30% in our gold ETF, GLD. We are 20% in our bonds ETF, GOVT. We are 15% in our stock ETF, RSP. We are 15% in our dollar ETF, UUP. We are 15% in our commodities ETF, USCI. And we are 5% in our Bitcoin ETF, IBIT. So those are our current weightings. As always, every week this is subject to change depending on market performance. This is currently what we have it at. So for our weekly return, for gold, we're down 1.45% for a loss of $1.10. For our bonds, we're up 0.54% for a gain of 27 cents. For our stocks, which did very well in a week, we're up 4.1% for a gain of $1.48. This is like a post-election pump right here. We have our dollar up 0.59% for a market gain of 22 cents. We have our commodities up 0.78% for a market gain of 29 cents. And we have our Bitcoin up 10.99%, it's called 11%, for up $1.27. Also a post-election pump. So these two for sure, stocks and Bitcoin were, after the election results were, or I should say as they were going up, the results and everything, those popped up pretty good. So we have our monthly return for these assets now. Gold up 2.18% for a market gain of $1.45. Bonds down 1.08% for a loss of 53 cents. Stocks up 3.18% for a market gain of 96 cents. Dollar up 2.77% for a gain of 93 cents. Commodities up 0.76% for a market gain of 26 cents. And Bitcoin up 22.47% for a market gain of $2.29. So just Bitcoin's ripping right now. Now we have our quarterly return. So it's over a 3-month period. How are these assets doing? Gold up 9.47%. for a market gain of $4.82. So it's been a great asset in our portfolio. Bonds down 1.52% for a market loss of 70 cents. Stocks up 9.47% for a market gain of $1.87. So basically matching stocks and gold. Stocks been coming up all year too. I've been 10% for a long time. I increased it to 50% recently. Definitely should have done it sooner, but we'll see how it goes. And like I said, post-election pump, this was a good jump in my portfolio. We'll cover that in the charts. Dollar up 3.79% for a market gain of $1.06. Commodities up 4.7% for a gain of $1.02. And Bitcoin up 33.26% for a market gain of $2.92. And keep in mind, I changed from BITO to IBIT ETF, so this might not be a full 3 months with IBIT ETF, but either way, great performance by it. And it's still at 5% weighting, so it's so volatile. That's why we keep it at a lower percentage, but when it does good, it does very good. So $2.92 just from a 5% position, that's pretty good. For week 16, we had a deposit of $30, so we had 5 buys of $29.74. And we distribute them across our 5 different ETFs. So we didn't buy Bitcoin in this because it was just performing so well. But government bonds, we purchased $6.79 of the GOVT ETF. Commodities, we bought $30.88 of the USCI ETF. Gold, we bought $10.97 of the GLD ETF. Dollars, we bought $3.89 of the UUP ETF. In stocks, we bought $4.21 of the RSP ETF. So this was our transactions for week 16. So remember, every week I deposit $10 cash into the platform because that's the minimum you could do. And once your cash portfolio exceeds $25, it auto deposits it into your portfolio and buys the ETFs based on their weighting. So every $30 essentially it'll add in based on the percentage. That's why gold is the largest, because it's at 30%. So the most amount of money went into gold. All right, so now we have our Illuvium staking platform. So as of filming today, we're at $40.83. Like I said, crypto is getting a bit of a bump this week due to the post-election. A lot of people betting on Trump's presidency for benefiting crypto. I don't know. I have no idea. That's just what I'm seeing right now in the market. Currently, we have 4.23 ILV staked for a market value of $172.59. Struggling today. No revenue distribution this week. We had our 2 previous payments, distributions, which equals 0.012 ILV, or a current market value of 50 cents. So this is our dashboard, so we can kind of look at everything. So we have our 4 staking investments here. So 1.32 on July 27th, which unlocks in 259 days. 0.79 on August 24th, which unlocks in 287 days. 1.01 ILV, which was locked on September 25th, which unlocks in 319 days. And our most recent deposit, 1.11 ILV, which was deposited on October 25th, which unlocks in 349 days. So remember this, the unlocking period is when these that I locked up unlock, which I can access them, I can sell them. But the revenue distribution payments, which are here, I could withdraw those immediately and sell them, whatever I want to do. So, but to lock them up is how I get that interest rate. So we're still waiting. Remember, the studio, the Illuvium studio, has to collect in their pot basically 150 Ethereum worth of value, and when they get that 150, they distribute it to stakers. So I have these 4 stakes, which cumulatively give me 4.12 ILV. So that's how much ILV I've staked. And when they reach that 150 Ethereum worth, based on how much you have staked, you get a portion of that, right? So I get my little payments here. So it's like passive income. So I said this before, that our M1 portfolio, both of these are ROI investments, return on investments. This is a more active one because we're making changes in the portfolio. and the alluvium is a more passive where we're just depositing, and we're expecting in the future revenue payments, right? So every time there's a revenue payment, we're going to get our cut. So these are both ROI. And then when I play the game, which I didn't do last week because it was an election week, so it was a super busy week. But whenever I play the game and I'm collecting the assets, that's where I'm trying to get the ROG, the return on gaming, where I can potentially sell those digital assets to other players in the ecosystem and profit from that. So as I said, zero revenue distribution this week, so nothing there. And there were no transactions for the portfolio, for the Alluvium portfolio. So now, go to our charts. So we have our gold chart, still great. You see this drop right here. Again, this is all post-election. You're seeing a lot of volatility this week. So post-election, this just dropped, right? So people might be assuming, air quotes, assuming, inflation is going to go down, gold's going to go down. I'm less optimistic on that. I think both candidates wanted to spend maybe not equally as much money, but they both want to spend more money, which is going to cause inflation. So I'm not giving up on the gold position yet, and it's only just returned to this uptrend, right? Even though it came down, it's still in this overall uptrend. And if you go back far enough, this is going back to October 2023, so right about here, kind of hit this bottom, and then it's just shot up, right? So this is still in a strong uptrend. This has done fantastic for our portfolio. That's why it's at 30%, our largest allocation. No reason you have to sell gold. Still doing great. And a new regime change with the new president over the next 4 years. We don't know how it's going to go. We don't know if inflation is going to go up or down. But at the moment, as I'm staring at this right now, we have no reason to sell gold. I think inflation is still going to rise, and we're still going to be dealing with the effects of it. So next, bonds had a sharp reversal right here. Had this come up right here as it got below this bearish signal. But anyway, so along the green line is our bullish trend, and along the red line is our bearish trend. So remember, we came to this inflection point where they were crossing, it shot up, then we had some jobs report data and it came down. And of course, I showed in the previous week that the jobs more recently are abysmal, like not even in the six figures, but it's been coming down. But it's hitting this line right here. So I'm wondering if it's hitting this line, is it going to continue along, maybe above this red line, or is it going to get below it? Either way, that's both bearish, right? Because it's going in a downward trend. Or is it going to continue in the upward trend? Total speculation, but my guess with the current presidential administration, bonds are probably not going to do good. But we're going to see. I'm going to follow the trend. I don't care what any politician or anybody says. I'm going to look at the lines on the chart. That's when I make my decision. On the flip side, the dollar getting stronger, coming up pretty strong here. Look on a 1 month. Again, look at this. Look at this right here. This is like post-election, just bam. Look at that fucking just straight line pop up, right? So like again, just a lot of volatility because of the election this week. I'm seeing numbers scattered all over the place. It's just because of the election. It's temporary. We don't know. Again, keep saying it, over the 4 years, what's going to happen. We're going to watch it. We're going to make all the decisions based on the charts. But this turnaround I'm seeing in dollars might be interesting. So if it goes up, it gets above the screen line, maybe holds, I might allocate more to US dollars. Don't know yet. It's at 15% right now. Could go to 20. Dollars is not a long-term play. Like, I don't feasibly see it in my mind holding it at like a 30% position like I do gold for a long period of time. I would more think about holding stocks at 30% for a long period of time if we're in a growth environment. But dollars is a strategic play. So when the economy's not doing good, usually go to dollars. Unless, of course, we're in a strong dollar environment, which means the everyday person like me and you watching this video, like the value of our currency can purchase more. Things at the grocery store might cost a little bit less, but we're still in an inflationary environment. So it's actually the opposite. Your dollars are buying you less. But if this trend goes up, maybe that trend might reverse. We'll see. Commodities, I always like to zoom out just to show this ETF. So going back to July 22nd, so over 2 years, it's been in an uptrend. Right now, we're kind of just chopping right here in this side area. We're just chopping around. We're not going up or down, really. We're just kind of maintaining. Currently, we're at 15%. I might raise that. If it goes up, like I said, if I'm not optimistic on either politician lowering inflation when they were running for candidate, I'm thinking they're probably going to cause it to go up. It might not be the, 9% that we saw, I think, in like 22 or 23. I forget what year it was, but we got really high and started coming down. But I think inflation is going to kind of stick in the economy going into 2025 at the very least. So right now we're at 15%. I might keep it there. I might increase it to 20. Maybe the dollars, maybe the commodities. We'll see. Or maybe the stocks also as an option. So look at the 1 month. Look at this pop right here. Boom. November 6th, post-election. Just boom. Pop right up. Boom, boom, boom. Right? So again, volatility. So been in an upward trend for a long time. I've talked about this. I was reluctant for a long time to put money into this because I thought, based on a lot of economic indicators, which I've highlighted before, like decreasing amount of job creation, increasing the amount of unemployment claims. I thought like the stock market would kind of show the effects of that by coming down, and it did start coming down, of course, right as I increased from 10% to 15% the other week. I think it was like right around here somewhere. I reallocated from 10% to 15% of stocks, and then the market went down, of course, right? But funny enough, after this election, now it popped up. So maybe it wasn't the worst decision in the world. I didn't know prior, though, when I made that decision, who was going to win. And I also don't care. I'm just watching what the chart does. As I keep saying, watching what the chart does. I'm following the chart, right? So right now we're at 15% in stocks. Now, if this trend continues, it can stay at 15%. But if it comes down, I'm going to have to drop it back down to 10%, maybe even lower if we're in a stock market crash. We'll see. But at the very least, if we zoom out from October 23rd, same as gold, it's just been in this uptrend. It's been going up, up, up. So now we're at 15%. So we're going to get a little bit greater increase if this trend continues in the stock market. So we're going to see. Now the fun one. Bitcoin. Look at this breakout of this trend. How much is this? Where's our fucking measurement tool at right here? So from this break line to about where we're at here, 23%. So it's had a 23% move over the past 25 days. So less than a month. It's moved up 23%. So pretty good. And if you look at a 1 month, look at this right here. November 6th, boom, pop. All right, pop up. And actually, if you look at Bitcoin currently right now, it's at 80,000. Bitcoin is at 80,000. So you see right here, going back to January, this was post ETF, post spot Bitcoin ETF. The euphoria came in, popped, and then it went sideways for like 7 months. It went down. Not even sideways, it went down for 7 months. And then now, coming into election, popped again. So Bitcoin is very influenced by market events, So post-spot ETF, there's a lot of euphoria. And then post-election, there's a lot of euphoria. So we're at 80,000 right now on price. Come back to our ETF. So this is almost starting, it looks like in my eyes, almost starting to creating a new trend. If I go all the way back here, really, if I do a trend line, kind of like from right here to here, it's a very sharp upward trend. But this is kind of what I'm looking at. So if I maybe extend it out like that more, I don't want to give it too much legs. Yeah, well, fuck it, I'll do it right there. I'll make these kind of wide. So kind of from where I'm seeing the peaks here, this trend looks like it's kind of breaking out right here. Now, I don't know if this is sustainable. Like I said, this is right now we're in post-election euphoria. Like you see this sharp spike up. So I don't know if this is sustainable, but if this trend continues, especially if the stock market's still going up, if this trend continues, there's a possibility to increase our Bitcoin allocation. Keep in mind though, like I said, Bitcoin's highly volatile and also trades on weekend. Like right now it's trading at 80,000 over the weekend. So there's just like there's big jump ups in price, there's also big drops, So I don't want to risk. The idea of this portfolio is, to be more diversified and safe with your investing for long term. But this is just kind of what I'm looking at right now. So we'll see going forward. I know it's a new presidential cycle. Every 4 years we do this. You know, I'm American. Every 4 years we do this. It's nothing new to me. I'm gonna trade based on charts. I don't give a fuck who's president. Doesn't matter at all to me. I'm gonna trade based on charts. I'm gonna move between all our 6 asset classes depending on which one's doing the best. Right now, as I'm looking at it, I still think gold's a good play. Bonds, I think I might reduce. I'm kind of torn between dollars, commodities, and stocks right now because I want to maybe pull 5% from my bonds position, reducing it from 20% to 15%, and then taking that 5% and either putting it in dollars, commodities, or the stock market. And I might have to watch a couple more weeks go by, kind of see what happens post-election. Once maybe hopefully some of the euphoria like slows down. Maybe it won't completely die down, but slows down post-election, just to see if I can get a better idea of these charts. It would be unlikely I put it towards Bitcoin because it gets the volatility, and I'm 5% in it. You know, that 5% is doing great. You know, I don't need to be super high, you know, to benefit from it. But I would likely take from government bonds 5% and either put it towards UUP for dollars, USCI for commodities, or RSP for stocks. One of those 3 I'm thinking. Right, but I'm gonna watch these trends play out. So it might be 30% gold and then 20% one of those 3. But we'll see going forward. Every week I make these updates. I'm gonna continue to do these updates. Doesn't matter who's in charge, whoever runs the world. I'm gonna keep investing because that's the benefit for me. And I hope that all of you watching will hopefully get some benefit from this, whether you invest for yourself or you're just learning. And you can always ask me questions, comments, or criticisms. Let me know what you think. And thank you very much for always watching, and have a good day.